My second riskiest stock I hold. This is another stock in this industry. They compete a little differently. This one's a little more retail focused rather than wholesale focused like an Avant might be. They also own their own brands and things like that, and that is the Planet. So Planet down about 4% year to date. Certainly a risky stock, another $100 stock. So yeah, it's going to be risky for these sorts of companies, right? Now, this just goes to show you kind of the risk of a company like this, right? Check this out. So I'm looking over their latest investor presentation, and it's a simple typo, but it's, embarrassing. It's embarrassing. So they basically have their second quarter, and it's supposed to be comparing 2022 versus 2023. And instead they put second quarter 23 to second quarter 23, which is not accurate, right? And so that's just one of those frustrating things you got to deal with these sorts of companies. Like Apple's not making a typo like that. Like Meta's not making a typo like that. The Planet, I guess they will. Okay, somebody must have been enjoying the product too much when they went to put this presentation together. Holy smokes, okay? Now, also their cash as of the end of last year, right? Which this kind of bugs me why they put the cash at the end of the year, whether or not the latest quarter, like that doesn't make any sense. But anyways, they had about $40 million there, or maybe they just didn't change these numbers as well, which is certainly a possibility. We'll see maybe in the next slide. But they had $40 million. I can guarantee you that number is likely lower now based upon all the money they've spent recently, acquisition, just cost in general, net loss, things like that. Okay, so here's the actual numbers for the company. And as we see, this is the latest quarter for 23, and this was 2022. So this should have said 2022 over here, right? So here's the deal. Revenues went down in the latest quarter. Gross profit went down in the latest quarter, and net loss went up substantially for the company in the quarter, right? On a year-over-year basis. Now, I believe that is the trough for the company. I believe, basically the business just gets better from here. That's my personal belief based upon what I've kind of heard and seen from pricing side. The business side in general, I believe this business troughed, and I believe every quarter kind of moving forward here for quite a while is going to be better and better and better, and they're going to be able to, hopefully flip that bottom line back around and also start having these revenues go up and up again, which will be certainly very, very exciting. Now, to add more confusion to the Planet overall and why it's, unfortunately my second riskiest stock is they just bought this VidCan company, right? Or VitaCan, and they spent $4 million of cash. They're going to dilute shareholder value in regards to this. And I don't know what this is going to make for the financials. I just don't. I don't know. And so this is one of those deals I just kind of have to put my trust in management team, but I can't buy more shares of stock right now. Absolutely not, because I don't know, this might be a brilliant acquisition, and this might look back in 3 years, 5 years and be like, geez, man, what a genius acquisition that was by the Planet to make that deal happen. But I don't know as of right now, right? This industry is not very clear cut, and this isn't like a big acquisition of some company that their whole history, and that's the problem with the Planet. And we don't know, are they going to do more deals? Are they going to dilute shareholder value more, right? Or are they going to spend a bunch more of the cash to make it even a more risky stock? Because one of the great things about the Planet over time has usually always been they have a great balance sheet. So you could question other things with the Planet, but you can never really question their balance sheet. Well, if they keep doing acquisitions, their cash is going to go down in a substantial way. Or if their losses keep picking up, guess what? Well, their cash is going to go down substantially, right? And so overall, the Planet, certainly a risky stock I hold, and that's why it's my second riskiest stock. Now, my riskiest stock I hold, this one's the most frustrating of the bunch, okay? It is. It's no doubt this is the most frustrating one, because here's the deal. This one should be among my safest stocks. It should be. But instead, it's my number one riskiest stock I hold in the entire stock market. The company sells diapers, wipes, soaps, lotion, shampoo, cosmetics. Like, it should get no safer than this. But the company has been so mismanaged over the last couple of years that, it's shocking. It's shocking how mismanaged this company has been, okay? Absolutely shocking. It's the most frustrating stock I hold by a mile. It's not even close. It used to be the chef. This is my new most frustrating stock, okay? And this stock is honest. And honestly has been so frustrating to deal with this stock. One is, it's a great year in the market, and so many of my stocks are just, having such a phenomenal year. And I got the honest company now 51%, like pathetic, okay? But here's the deal with this company. So they just brought in a new CFO. Now, you might see this as, so Kelly Kennedy is stepping down from the company, right? Which, You know, they kind of cleaned house there. They got rid of the CEO, obviously, at the end of last year and the beginning of this year. They brought in Carla Vernon, who, you know, seems like maybe she'll have it going on, but we'll see, okay? I can't get too excited about any of these folks. But they kick out Kelly Kennedy. Well, she's stepping down. We'll call it that, okay? And they bring in this gentleman from Duluth Trading Company, right? Dave Loretta. And at first, I don't really follow Duluth, so I was like, okay, at least he has public company experience being a CFO, okay? And I looked at this company, I'm like, oh no. Here's the past 5 years for Duluth Trading. The stock's down over 80%. Are you flipping my flapjacks? They bring in this guy to be the CFO of the company? Oh my gosh. And of course, you can't pin this all on the CFO of the company, right? It could be many other things, and just, you know, it could be the CEO's fault, it could be the marketing team's fault, and many other folks. But at the end of the day, it's not great to see a CFO incoming to a company whose stock is down 80% in the past 5 years. It's like, are we kicking out somebody who wasn't doing a good job for a person who does just as bad of a job? Like, that's the way I kind of think about this. Like, when I first clicked on Duluth, I was like, oh, please tell me this is a company that's been executing well over the last few years. And I'm just like, oh my gosh. Oh, it's honestly so frustrating. Net loss for the company last quarter came in at $13 million. That included $1 million in costs related to the transformation initiative, compared to a net loss of $10 million in the second quarter of 22. So basically, net loss went up for the company overall. Balance sheet had about $18 million on it. So here's the deal, okay? Honest needs to honestly get their margins and bottom line fixed fast. If they don't fix fast, they will be another chef. They will face another, let's call it the depths of a bankruptcy type situation. Or they're going to have to try to dilute shareholder value, which is not going to be pretty when your stock's $1, okay? They need to fix things quickly. So Carla needs to work quickly and get this business in a right place fast. And there's no reason why she shouldn't, considering the revenues this company has coming in and the relationships and the partners this company has. I mean, they're close with a lot of the biggest, most important retailers you could ever want to be close with. So Carla better get it done, and get it done absolutely quick. But yeah, that's my number one riskiest stock in the stock market. Who would have known diapers and wipes could be such a risky business? Palantir. It's been a little bit since we've spoke about Palantir stock. In today's video, I want to run through some big deals that are going on in regards to Palantir right now, some potential deals that are out there that could go through very soon. There's a lot going on in regards to Palantir, so I thought I would just throw it all into a Palantir video here today on the reaction channel. Could I give my perspectives, opinions, and all this? We got a bunch to go through in this one here today, folks. So busy Palantir related video. Appreciate everybody joining me as always. Hope you guys enjoy this. Got a lot to go through in regards to this. By the way, got a free workshop for you guys. Actually, 2 free workshops. That'll be pinned comment down there. One's this one, and then the other one's investing foundations. Okay. Now, before we get into all the deals that are going on in regards to Palantir and all the potential deals Palantir has in the pipeline here, I want to get into just kind of my comments around the stock price and how the stock has been holding up. And what I'll say is I'm actually really impressed with the strength of Palantir's stock price, given the fact that AI hype kind of died down certainly a little bit after last quarter with a lot of companies. A lot of people thought, oh, everybody's going to be reporting these amazing numbers right away. Really, we're finding out it's more of a 2024 story in terms of the number side from the software side, right? NVIDIA came out with great numbers, but still, it just kind of seems like there's a little bit of a damper around the whole AI excitement and movement for the stock market right now. And so with that being said, I'm really impressed with kind of how Palantir shares have been holding up. So obviously we're doing very well in the shares. I think we'll be doing a lot better in the future. Now, I don't know if you guys saw yesterday, there's this big AI meeting with the government, and many of the biggest, most important business leaders in the world were at this. And guess who was sitting next to Elon Musk is Mr. Alex Karp. So Alex Karp actually sat next to Elon Musk for this event, which, from my understanding, like all the big dogs were there. It was Elon Musk, it was Zuckerberg, I even heard Bill Gates was there. Like a lot of the biggest big dogs in tech were all at this event, right? And it goes to show you really how important like Palantir is in relation to AI. The fact that they got an invite there when you got, former, obviously CEO of Microsoft there, when you got good old Mr. Tesla, Maesla, and Starlink, and the richest man in the world there, and all these other individuals, it goes to show you that Palantir matters significantly to the future of AI and what happens here, okay? Now, first, huge deal, potential deal. Let's call it potential deal. It's not a deal yet, but it's potential, okay? Check this out. Saudi Aramco, one of the largest companies in the world, is using Palantir Foundry. This would be a big thing if this trial succeeds. Energy companies usually take around 3 months to be made public. This, alongside Berkshire Energy, requires special treatment. This gentleman, Ethan Square, says he'll be making updates on this, and he kind of keeps everybody up to date in regards to who's trying out Palantir's products and kind of like forecasting potential deals. Now, when you see something like this, doesn't mean for sure Saudi Aramco is going to do a big contract with Palantir, but it is a promising thing to see. And it is one of those very important things that, I mean, if this is a deal that actually happens, I mean, can you imagine the contract size this is going to be, folks? I mean, this is massive. And from my understanding, Palantir has done a phenomenal job with BP over time. And so with huge cost savings. So at the end of the day, if they can find cost savings for other energy companies and help other businesses be much more profitable, I'm sure they could do it for Saudi Aramco as well. And I'm just telling you, like this deal would be crazy. I mean, you could be talking about hundreds of millions of dollars a year in potentially a deal volume. We'll see what happens, or if it happens. So we can't get too excited. It's potential nothing happens there, but it's a very promising thing. Okay, very, very promising. We'll see what happens there. I think that matters significantly. Now, in terms of something that is actually going on right now, Palantir Technologies signs partnership with Titan defense firm Babcock. Palantir is enabling Babcock International to strengthen its digital defense capabilities through the Enterprise Agreement, EA, announced at DSEI today in London. The partnership will leverage Palantir's AIP, the AI-enabled instance of the company's software that will aim to transform how Babcock Workforce captures, integrates models, and builds data-driven solutions. Unlocking the power of data in this way will allow the company to make better informed, data-driven decisions, maximize platform availability on customer assets, and understand how to derive even more value from the organization's data. So Palantir doing what Palantir does at the end of the day, right? I'm very happy to hear they're going to leverage Palantir's AIP. This is obviously huge future growth for the company overall. And yeah, definitely very excited to see that go through there. Now,